Hey everyone, it's Peter Schiff. It is Friday, February 26th, 2010. Well, a very, relatively quiet day in the stock market today, although there was a lot of movement in other markets. Gold was up over $10 an ounce. Oil was up about $1.50, just under $80 a barrel. The dollar was decisively weaker across the board today. You know, over the last several weeks, as sentiment has been focused on the problems in Greece and worries over Europe and the euro, the sentiment in the currency markets has certainly shifted sharply from being worried about the dollar and selling the dollar to being worried about the euro and being short the euro. And I think that set up a situation where the dollar is really ripe for a fall because we really have the traders going the other way right now. And I think that's likely to happen. The dollar index is still just above 80, but I think this is certainly a good area to be selling the dollar from a technical perspective. Also, I'm looking at the action in gold and, watching how gold is trading. It really seems like it's leading the markets. The gold chart looks really strong to me. When the asset classes are weak, including stocks and gold holds up the best. And it's when the markets turn around, it's the first to rally. It leads the way up on every rally. Gold really looks strong to me. We also heard rumors that China is eyeing a major purchase of gold from the IMF. And so I think all of that seems to indicate a weaker dollar, not a stronger dollar. And I think people who have been betting on weakness in the euro are going to have to rush to unwind those trades once the dollar index decisively breaks down again. Looking at some of the news stories today, one of the more interesting ones is the AIG news. AIG received massive aid from the government in the biggest bailout in history. Of course, I was arguing at the time to let AIG fail. Unfortunately, the Congress and the president listened to their friends on Wall Street and backed this bailout. Now comes word from AIG that they need more money, that after paying lavish bonuses to themselves, they're broke again. They just lost a lot of money, and now they need another bailout from the U.S. government or the U.S. taxpayer. When is it going to end? And of course, if we bail them out again, we give them more money, well, you never know. They'll be able to use that money for another round of bonuses. Before we bail them out again, and of course we shouldn't do that, why don't we ask all those AIG executives who got bonuses to return them? And before they get another round of bailouts, they got to give all their bonus money back. Of course, the best thing to do would be to let them fail, but I have little hope of any real rational decision making on Wall Street. Also, we got news today that sales of previously owned homes plunged. I think about 7.2%. It was a 7-month low in home sales. And again, this is further evidence to most people that the economy is not as strong or recovering the way people think. I'm looking at this Bloomberg headline. I'm trying to look at it anyway. It's not coming up. And it says, existing home sales in U.S. drop as lack of job growth undermines recovery. I would say that the lack of job growth means there is no recovery. That's why there's no job growth, because the economy is not recovering. You see, if there really was a recovery, there would be job growth. The problem is all we're looking at is the numbers. We're looking at the fact that we're spending more borrowed money. The government is spending money, but that's not economic growth. We're destroying our economy. We're taking on tremendous amounts of debt. You see, the bigger the government gets, the weaker the economy gets. The bigger the government is, the more private sector wealth it has to drain to sustain itself. That is the problem. And, talking about these home sales, they're going to get a lot worse based on an announcement today, a long overdue announcement from Freddie Mac. They said today that they're finally going to stop guaranteeing and securitizing interest-only mortgages. Well, it's about time. I was criticizing this a long time ago. Why were they using interest-only mortgages? That was a tool so people could buy houses that they couldn't afford. It just enabled people to speculate on the real estate market, because what these interest-only mortgages allowed you to have was the smallest initial payment. But of course, after the teaser rate, typically 5 to 7 years, the loans would now reset. They would fully amortize. So the monthly payments would skyrocket. They would skyrocket well beyond the ability of the borrower to afford it. It was purely a way for people to bet on rising real estate prices. And unfortunately, government-sponsored enterprises underwrote those bets with our taxpayer money. And now they're going south. You know, Fannie, they came out today with the statistics. Of all their loans that they guarantee right now, 4% of them are non-performing. But of the interest-only loans they guarantee, 17.6% are non-performing. Go figure. And 7% of all the mortgages that Fannie and Freddie guarantee are interest-only. And they also said that the average loan-to-value of their interest-only mortgage is 106%, which means the average home is worth less than the mortgage that Freddie and Fannie is insuring. And of course, I think the loan-to-value is actually a lot lower than that, because if they actually foreclosed on those properties and tried to sell them, the prices would collapse. They'd be lucky to get probably 60 or 50 cents on the dollar if they went into foreclosure on those properties. So it's about time that they stop this practice. But what this actually means now is that interest-only mortgages will no longer exist, because 97% of the mortgages in this country are guaranteed by the government. If the government won't guarantee it, private sector won't supply the loan because they don't want to take the risk. So basically what this means now is that there are no more interest-only mortgages. It's no longer an option for people to use interest-only mortgages to pay inflated home prices. So that's going to knock away some of the demand and some of the price supports that continue to underline and prop up an overvalued real estate market. Also, I wanted to mention today I was watching some of the theater going on in Washington with respect to Obama's healthcare summit, or whatever they're calling it. And again, it's a bunch of theatrics that show the Democrats and Obama are trying to bait the Republicans into this summit to try to work out their differences and come to an agreement on a healthcare plan. Of course, the Republicans shouldn't even be taking the bait because there is nothing to agree on. The premise is flawed from the absolute start. They have to scrap the whole thing. You see, healthcare reform is important. It's long overdue because the government has screwed up healthcare with all the regulations and all the subsidies that have distorted the free market and that have created ever-increasing healthcare and insurance prices. So what we need is real meaningful reform, which means we have to tear up the concept of Obamacare and start from scratch. And there are some legitimate proposals coming certainly out of the Republicans in Congress that really make sense. Maybe they're not the best things that we can do, but they're certainly an improvement over what we have now. And it'd be great if we can get the congressmen to agree on making the reforms that cost nothing to the taxpayer, but that immediately bear fruit as far as bringing more market forces to bear to control healthcare costs. Because I've said this time and time again, if you look at the areas of the economy where the market is working, whether it's cell phones, plasma TVs, laptop computers, the quality always improves. They get better, they get more sophisticated, yet the price continuously comes down despite the fact that quality is improving. The same thing could be true in healthcare if only the government would get out of the way and let free market forces operate. And of course, what the government wants to do with this Obamacare is further distort free market. You know, what part of the tenet or the principle of this plan is to require Americans to buy health insurance. Now, apart from the constitutional aspects and the freedom of why should the government require Americans to buy something? I mean, if I should be able to buy what I want and not buy what I don't want. And if we establish the precedent of the government requiring us to buy insurance, then they can require us to buy whatever they want. And they can forbid us to buy what they don't want us to buy. I want the market to rule. But think about this for a minute. One of the best ways that we can control costs in a free market is we can refuse to buy products that are too expensive or that we don't like. But what the government wants to do is require us to buy insurance, no matter how expensive it is, and no matter how much we don't like it, we have to buy it anyway. How does that empower the market? How does that empower the consumer? To me, it sounds like it empowers the insurance companies and it empowers the government. Anyway, that's it for today. Have a great weekend, everybody. I will be blogging again early next week. Take care. Bye for now.